Hi, and thank you for joining us. My name is Ryan Grady, investment advisor, representative here at Paradigm Wealth. I'm here with our Chief Investment Officer, Joe White. It's been a minute since we were able to put something out, but obviously a lot going on, so we wanted to get some stuff out to you guys, so here we are. What we want to do is kind of talk about how did we get here, some of the things that have gone on here in the recent past, where we're at now, and what we're looking at as we head into the end of 23, can't believe I'm saying that, the end of here of Q4, and what are some things we're looking at there. So we're going to start going back, looking at how we got here. Joe, I know in Q3 has historically been one of the more challenging times in the market over history. Obviously, the Fed has been a big part of the topics in terms of their decisions. Talk to us about what's transpired over the past couple weeks, months. How did we get to where we're at today?
You know, I think if you looked on paper, markets, you would think, have had a pretty good year, right? You got the S&P 500 up over 15%. You have the NASDAQ up over 30, right? But if you start to peel back some of the layers, you know, as the term I think you've maybe coined, the Magnificent Seven, right, have really driven the market. And outside of a strong concentration from there, I think, you know, investors have probably had a little bit of a muted return to get here at this point in the year. You know, we had a strong run up until basically the end of July. You know, a little bit of a oil price shock around then, inflation kind of showing that, hey, it's not quite dead just yet. Markets kind of, you know, sold off, call it 10% correction type territory from there. And then just last week, kind of as we transitioned from the third quarter into the fourth quarter, you know, you had the Fed hinting, and I use that word hinting very strongly,
Sure,
at a potential pause. Jobs report coming out, hey, maybe the economy is kind of cooling a little bit. We've had a good return here up until this point of the year, but certainly not out of the woods yet. But, you know, on paper, S&P, NASDAQ, some strong returns, but outside of that, I think pretty muted.
You talked about a lot of stuff there. You talked about almost where bad news is good news, right? Where, you know, the economy's slowing down, but that's kind of what we need to see if the Fed's going to pull back from their hikes. So interesting stuff there. Now, let's talk about Q4. I'm sure that's going to be part of that discussion as well as some major headlines in the news with some geopolitical issues that we see going on over in Israel and the Middle East. Talk to us about what you anticipate keeping our eyes on in Q4.
Yeah, so Q4, much the opposite of Q3, generally the strongest quarter of the year in terms of stock market returns, right? Outsized returns with a high hit rate in terms of what percentage of the time the fourth quarter is positive. But we do have a lot of things out there we need to pay attention to, right? Obviously, the main one in the news right now, the conflict in the Middle East, still pretty fresh, just over a month old at this point. And I think that, you know, the two main things there are, does the U.S. really get dragged in some sort of larger capacity? And what I think is really important, too, is what does this do for the global supply chain and shipping in the area, right? You have the Suez Canal very close by. You have the Strait of Hormuz very close by. We're just coming out of a period where supply chain was really disrupted from all the COVID things, and we've kind of seen that unravel a little bit as inflation has come down a little bit lower. So any disruption there would be, you know, pretty detrimental to the economy. The other side of the coin is here domestically, again, the Fed with hinting that maybe they're done raising rates and where inflation's going. We're going to have another Fed meeting in December. If they do decide to skip a rate hike there, then you could conceivably say, okay, maybe the Fed is done finally raising rates. We're going to get some more jobs reports. We're going to get a couple more inflation data points. I think, you know, when we sit here on December 31st and look back at the data we're going to get between today and that period of time, I think you're going to have a pretty good idea of, okay, inflation is, you know, pretty set on going in the direction that it's going in, and the Fed could potentially be very much done raising rates, which, you know, could potentially be a good thing for the market. But geopolitical and living with the data are, you know, are the two kind of in the crosshairs between now and the end of the year.
So as we look into 2024, what are your thoughts on, is there going to be a recession, big, small, big R, little r, what impact that will play? I know people talk about, you know, the Goldilocks scenario, not too hot, not too cold. Is the Fed going to get it just right where, you know, we're able to avoid a recession? What do you think in those terms, Jeff?
The Fed has had quite the task in order to try and thread the needle of a soft landing, right? We went from a period where this would be the most anticipated recession of all time to the most anticipated soft landing of all time, with the way investors have kind of gone back and forth. Look, I think we've had a nice little rally here over the course of the last couple of weeks. You know, the market always looks towards interest rates and especially towards growth stocks, which generally lead the market. Lower rates better for growth stocks, right? So we've seen a little bit of a snapback there from those stocks. But look, I don't think we're necessarily out of the woods yet, right? Some of the geopolitical things that I talked about could, you know, bring in an unforeseen type of problem into the economy that we don't have yet. But still, there are quite a few signals kind of flashing red and increasingly red in terms of the recession. You're starting to see delinquencies pick back up, and that was even before student loan payments kind of restarted. So there's a lot of pressure coming into the consumer. We'll see how the holiday season comes in terms of spending. Generally, again, a huge quarter for a lot of corporations. But look, the early part of next year, I certainly think that a recession is still possible. I'm not totally discounting that scenario just yet. Albeit I think it'll be a mild one, right? We've had a tough ride here the last 18 months, so I don't think we're going to turn around and all of a sudden enter into financial crisis next year. But I do think the balance of 24 could be a solid year. I just think, we're not quite out of the woods just yet. So, it's in my purview to keep our clients a bit defensive and protect them, in the next couple of quarters. But, certainly I think even if we do have a mild recession, we'll come out the other side and exhibit some good returns on the backside of that. So to answer your question, I do think it is possible. I don't think we're completely out of the woods just yet.
Okay. Thank you for that, Joe. That was absolutely very informative, so appreciate your time. In closing, want to reach out to all of our Paradigm family and talk about a couple things too as we round out the 2023 year. Some things for you guys to think about and remember. First is RMDs. We're going to be working with all of you, reaching out to all of you proactively to make sure those RMDs are satisfied by the end of the year for those of you who are RMD eligible. So we'll be talking to you. We haven't already done so. Certainly we're going to be reaching out to make sure that is taken care of. Second, if you had any taxable events throughout the year that we should know about, before we close out the 2023 year, let's have a conversation about that as well. Let us know what we can do or how we may be able to help you in terms of maybe realizing some losses to offset gains, things of that nature. Let's make sure we're having a conversation about that as well. And finally, for anyone out there that we talk to, we're going to be bringing up a conversation related to if there's cash on hand out there. We want to make sure that you're taking full advantage of the environment we're in now, this high interest rate environment where now there's products out there that have very attractive yields to them with very low risk, something we absolutely want to have a conversation about. It's a unique environment that really didn't exist here for quite some time. So another thing we're going to be reaching out to talk to you proactively about. All right, well, that's all I got for now. Once again, thank you, Joe. Certainly you'll be hearing from us a lot more in the future. So thank you for joining us, Paradigm family. Have a wonderful Thanksgiving Day holiday, and we'll talk to you soon.
Take care.